Mayuresh Joshi also joins us on the show. Mayuresh, not just about P2P, but of late, RBI has been very vocal about the kind of concerns they have on retail lending, whether it's the draft LCR norms or the fact that they're tracking the CD ratio very closely, the tightening of the liquidity for NBFCs. There have been quite a few cases where RBI has actually tightened the norms. What does it tell you? Do you see a lot of slowdown now in consumption, urban consumption, as a ripple effect of all of this?
Afternoon, Anisha. I think, yes, I think RBI has been extremely cautious in terms of liquidity management. And they even flagged off in terms of that concern in terms of how the deposit growth will shape up in the next few months and the next few quarters. Obviously, what you probably see in terms of deposits as a percentage of mutual fund holdings, that has substantially gone up. I was reading some data points where it has actually gone up from 21% a year back, a year and a half back, to almost 30% at this juncture. So two, three aspects. One, I think in terms of managing liquidity and ensuring that there is enough in the system as we speak. What actions do the banks take? We've already seen a few public sector banks increase their lending rates by a few bips, which is a prima facie indicator that there might be some element of increase that might happen proportionately in terms of deposit rates as well, garner interest back in terms of deposit mobilization. In terms of banks accessing CPs and CDs as an alternate source, that becomes an option which is viable for the financial system at this juncture. But again, I think as rates start moving downwards with rate cuts expected, how does this overall system evolve is something to see. And ultimately, I think if we increase deposit rates proportionately, does that have an impact on the interest spread? So I think there is a lot more that RBI has on its hands at this current juncture when it comes to liquidity management. How do banks tackle all this, including NBFC lending, because all that becomes part and parcel of the system itself seems to be seen in the next few months and the next couple of quarters. So yeah, liquidity and deposit mobilization does seem to be some sort of a pain area for the financial ecosystem at this time.
Yuresh, why are markets holding on so exceptionally strong? Everybody is worried about valuations, yet the market refuses to come down.
Afternoon, Nikuj. I think liquidity has been one of the forefronts of the market at this juncture. So if you talk about the gross number when it comes to mutual funds, when we talk about the net number, when we talk about SIPs, it is still a higher number that we are probably speaking about. Also, let's not forget PMSs, AIFs, the kind of cash that a lot of these institutions are probably sitting at this juncture, and more money coming in every passing month. To counter that as well, the FI holding in terms of not just the index stocks, but the broader market as well, is close to its all-time low levels as we speak. So at some point of time, as the rate cut cycle gets initiated, and as India gets its fair share of flows back in the next few months, liquidity is something which is holding up the markets. Markets are not cheap. Markets are not very expensive. Large sections of the markets are where valuations have become just not tenable at this juncture. But still, liquidity is where I think is keeping the markets afloat at this point of time. And expectations of more FI expected to come in after rate cuts.
View as far as the market is concerned, but time now to bring on board Prakash. He's joining us to talk to us about some exclusive story that he's picked up. Prakash, you've been tracking that meeting that the finance minister had with the PSU banks earlier today. Any insights as to what was discussed, who actually attended the meeting, what are the key takeaways?
Yes, this meeting has now concluded, and we are given to understand that the various issues were there which has been discussed by the finance minister. A comprehensive performance review has been done by the finance minister, and that is primarily based on 6 key parameters. However, the government has not come out with the statement. We are expecting that the government will come out formally issue some statement after some time, but we are given to understand that the focus was on deposit growth and a credit to deposit ratio. These are the important issues which have been discussed in the meeting, and the clear instructions have been given to the public sector banks to come out with a different set of a strategy to increase deposit growth. Along with that, banks have been told they should not forget the fact that the customers have multiple investment options at this point of time. Therefore, different approach is needed. Along with that, some issues related with the asset quality of the public sector banks, also improvement and resolution process under NARCL are something which was also part of the discussion. Government's flagship schemes such as PM Awas Yojana, PM Surya Ghar Yojana, PM Vishwakarma Yojana has also been reviewed by the finance minister in terms of credit growth. Along with that, some credit growth when it comes to sunrise sectors have also been reviewed by the finance minister, and clear instructions have been given to the public sector banks to take all possible steps to increase credit growth and come out with a different set of a strategy to mobilize deposit growth going forward. So these are the important issues which have been discussed, and we are expecting, because a second meeting, which is with the RRBs, has begun, and we are expecting that the finance ministry will come out with a formal statement after this meeting. Back to you.
Point. A lot needs to be done in order to increase the liability side. Now let me explain it to our viewers. What is liability? Liability for a bank is the deposit which you give. 25% of the savings of India essentially were moving in form of fixed deposits. Now that number has been taken over by SIP. Indians are saving less. Real estate is in a boom, and banks are feeling the heat. And that in a sense has really been one of the problem areas why banks today are now in a sense making a case that for interest rates to come down, they need cost of capital to come down. Cost of capital will only come down if there is access of money coming back into banks, unlike a lot of savings which are now moving into SIPs and into equity market directly and indirectly. So that is something which in a sense is the big talking point, and that is where I think some important decision making needs to be done. Mayuresh, what's your view on some of the PSU banks? I mean, if I do a relative comparison, their CASA franchise is much stronger than what some of the private banks have. PSU banks have done rather well for themselves. Do you think that outperformance is real and it's here to stay?
Collectively, yes, Nikunj. And our take is that the CASA outperformance stems from the fact in terms of a lot of the legacy accounts that PSU banks hold. And therefore, they are in a slightly better position compared to the private counterparts. The second element, obviously, is the expectation in terms of how the balance sheet dynamics are expected to shape up. And therefore, credit deposit ratios will remain steady. Obviously, I think on a year-on-year basis, credit growth has been almost around 13%, while deposit growth has been 10%, which obviously flags off the kind of concerns on deposit mobilization. But at some point of time, normalization will start taking place. The asset quality resolution that has happened on most PSU bank balance sheets is there, and is there probably to continue happening at a steady pace going forward as well. Their PCR ratios that are at all-time high, and capital adequacy also remains extremely strong. So selectively within this space, if you leave aside SBI, within the large names, Bank of Maharashtra, as an example, has consistently been delivering good numbers on most of these parameters as we speak. And therefore, I think Bank of Maharashtra within the PSU bank, something like a Bank of Baroda as well, continue to be attractive both in terms of expected earnings growth as well as inflation.
Okay, just stay with us, Mayuresh. Lots more to discuss, but let me quickly take it across to Ansh as well, get a sense of what really is happening in the markets right now and which are some of the volume buzzers in trade.
So Hindalco will be the first stock in focus, as the stock has given a good breakout from its 9-session consolidation pattern from around that 635 level. In addition to this, the stock has also surpassed above its 100 DMA level, and it has been advancing for third consecutive session. Apart from this, Glenmark will also be in focus, as the stock has actually touched record high level with volume of over 2 times its average trading volume of last 20 session, indicating good participation in today's move. Also, the stock trades above its key DMA levels as well. Birlasoft is also in focus, as the stock has given a breakout from its 9-session consolidation pattern from that around a psychological mark of 600 with a volume of over 2 times its average trading volume of last 20 sessions. BPCL will also be in focus, as the stock was actually trading within a downward sloping channel, and today it has given a good breakout from that channel, indicating a potential reversal in trend on upside. Apart from this breakout stocks, there are high chances of Birlasoft, Balrampur Chini and Hindustan Copper getting into ban list for tomorrow. So keep an eye on the stocks.
So those are some of the price volume buzzers. But talking about price volume buzzers, Kaplan Point up 19% and Godfrey Phillips 19% higher on that one. So clearly firing away as far as that stock is concerned. IIFL Finance has managed to perk up quite smartly in the last few minutes. Triveni Engineering is doing quite well. Quite a few buzzers in the trading session. Mayuresh, have you looked at a couple of these names, Kaplan Point as well as Godfrey Phillips?
So we don't cover Godfrey Phillips, but Kaplan Points in particular, Anisha, the expectation largely is that the earnings for most companies within this space have been reasonably better. Now, the expectation largely again is with the kind of pipeline that these companies possess, the expected timelines for these launches over the next few quarters, with pricing being on their side, will mean better operating leverage and better margins as we head into the next few quarters. Also, I think in terms of expectations of steady state earnings growth over the next couple of years, assuming a reasonable amount of blockbuster launches that they have with the limited time period and the opportunity that these companies might get, they probably seem to be in a good space at this juncture. And therefore, I think earnings should continue to be on a very strong footing. Something like an FDC is something which we are liking at this point of time also on any kind of a decline. Our expectation is outside the large names, a few of these mid-cap names where earnings growth can continue to be pretty steady. FDC probably seems to be one case in point at market return where RKB is steady. So yeah, space looks very, very interesting.
In fact, I just want to talk about some of those buzzing metal stocks as well, because they are the ones which are really sort of holding up today, be it a Hindalco or for that matter, what you're seeing on Tata Steel as well as the stock price. Having said that, we were chatting with Go India advisors Rakesh Arora. He believes that the trend will stabilize and metal prices will remain range bound for some time to come. But he actually sees no major positive triggers for the sector as of now.
They would remain range bound around these levels. I don't really see too many triggers which can push commodity prices much higher until unless China comes out with a very big stimulus. The small stimuluses they are doing to support the economy is not really working. And also the geopolitical situation is such that countries are putting in trade barriers against imports from China, and that doesn't really augur well because these countries themselves can't really produce or grow that fast. So demand for commodities is likely to remain muted for the next year or so from what it looks right now. And so I would think at the best case scenario is a little bit of consolidation of commodity prices at the current levels.
Okay, so that's the latest coming in as far as cement sector is concerned. But separately, what are the big trading ideas that our chartists have at this point of time? Let's take the BDSC trades. Rudramurthy, you go first. What's the buy today, sell tomorrow idea, if any?
See, for me, metals are doing great and this can continue even for tomorrow. Vedanta is a buy for me, looking at target of 450 with a stop loss of 427. And for me, ONGC also looks very, very strong. One can look at buying ONGC for a target of 345 with a stop loss of 330.
Okay, so those are the top recommendations, ONGC as well as Vedanta. Nuresh, what about you?
So first would be a buy on HCL Tech. The stock has given a recent swing high breakout, good momentum here. Stop loss at 1670, target price of 1720. Second is a buy on Shriram Finance, a new 52-week high here, strong momentum as well. Stop loss at 3040, target price of 2150.
Okay, so those are the top BTSC trades right now, but just taking stock of what else is happening in the market. So Godfrey and Kaplan Point we have been talking about and they're on fire. IIFL Finance 2, First Source, Polymed, eClerx, Angel One. These are all the stocks which are buzzing away. New India Assurance is the other one which is actually holding quite smartly. V-Guard is down in the trading session. Kalyan Jewelers is coming under pressure. We did speak with the Senco management earlier in the day. They were quite hopeful of a double-digit kind of growth in the second quarter itself, with margins also holding up. So let's see what really pans out. But in terms of the other internals of the markets, it is the entire auto sector which is in focus, right, because of the downgrades as well. Mayuresh specifically wanted your view on Ola Electric if you have been tracking that one, and for rest of the sector, what kind of churn would you make?
No, so Ola Electric has a fantastic debut, and the results were quite decent. Their commentaries in terms of the new launch that they're expecting at the price point at which they're expecting it as well, 75,000, getting into the 5G battery ecosystem. I think that is keeping a lot of the investors for traders enthused in the stock. But for the sector as a whole, Anisha, again, I think last 2 years have been exceptional. Whatever they'll report this year will come off in terms of the higher base of the last couple of years. We're obviously seeing some amount of waning in demand coming through, unsold inventory starting to build up at the dealer end as well. And therefore, I think how this actually shapes up in terms of new launches, whether it's four-wheelers or whether it's two-wheelers, is going to be very, very interesting. From a price action perspective, obviously, I think they're trading at the higher end of their spectrums, as well as valuations in terms of their standard deviations over the past 3 to 5 years as well. So this year is going to be a steady state year for most auto companies. And therefore, I think four-wheelers, two-wheelers, if somebody holds, can hold on. But we do not expect any exceptional returns from this space. Auto ancillaries selectively far more attractive at this juncture because the kind of mix that they probably have in terms of both the internal combustion engines and the electrical platforms that they're probably catering to along with the replacement market might actually shape up a tad bit better than the original equipment manufacturer. So I'm being a little bit more positive and biased and selective on the auto ag space. Autos might just be market performance this financial.
Other than the sectors which we've already discussed, wanted to understand what are your top holds? I'm guessing there's not a buy list right now in this market and top avoids.
Afternoon, Aisha. I think consumer discretionary is something that we still continue to like selectively. So this is vectors, as an example, is something where our belief is numbers have been pretty decent. They are on an expansion track. So they are expanding their capacities with MP. They're expanding their capacities in Maharashtra. So they're getting out of the northern regions, trying to expand their foothold in the western areas as well, which should augur well in terms of volume. They are suppliers to most USR players in the country. And at this juncture, both the expectations in terms of the premium biscuit market as well as the bakery product segment as well. There is significant amount of growth that the organized players can have, which will relate to better EPS rating and rankings as we see in India and better quantity. So this is one sector where our focus probably lies. The other one is probably in terms of how sugar as a space can evolve. And therefore, I think Taj Industries is an absolute proxy in terms of how the segment is expected to evolve. You already know about 2G, 3G ethanol plants that they manufacture, but diesel, airline turbine fuel, expectation in terms of marine, what they're probably doing in their engineering segment when it comes to water treatment solutions, the high purity segment. They're in very late stages and technological advancements on implementing this as well. So I think this is a very interesting space, which Praj is probably expected to be being selected, but broader markets, a few of these ideas have.
Okay, so Praj Industries, Mrs. Vectors, these are some of the names that you can watch out for and which still look very interesting from the market point of view. Separately, in terms of the market action right now, well, it's pretty much, very somber at the moment. Reliance Industries, of course, is doing quite well, 0.8% higher. TCS, Hindalco, NTPC is in focus. On the back foot, M&M is coming under pressure. We have been talking about how the auto sales and the inventory situation is panning out. ICICI Bank, Axis Bank are the other ones. But overall, looks like it's a bit of a somber closing for the markets. We're just around the 24,600 mark, in between the range that we have been looking at throughout the day. But for the wrap of the day, let me take it across and toss to Snehi, who's been standing by. Hi, Snehi.
Hi, well, yes, let's take a look at how this day has panned out to be today. And on the Nifty front, rather range bound, like you mentioned, we've ended below the 24,600 mark. We did dabble into the red for some time during the day, but we've managed to jump onto the green, but not much happening. But well, yes, nonetheless in the green. Let's take a look at what the other indices have done. Sensex also rather flat, but above 80,400. Advance decline ratio in the favor of the advances today. And when you take a look at the broader markets, Nifty mid cap was in tandem with the Nifty rather flat coming in, but Nifty small cap was an outperformer today, almost 1.2 1.3% higher or 1.8% higher now is where Nifty small cap is ending. Let's quickly take a look at some of the Nifty gainers and losers. On the Nifty front, you had Hindalco, BPCL, Shriram Finance, Tata Steel, LTI, Mindtree, all of these are your Nifty gainers. On the flip side, some stocks like M&M, Bajaj Auto, Axis Bank, IndusInd Bank, SBI Life and Tata Consumer, they weighed on the index today. Now in terms of the sectoral moves, Nifty Metal was your biggest winner in a trade today, almost 2% uptick coming in on that front. That was followed by Nifty Energy. PSU banks also made a comeback today, a rather smart recovery on that front as well. Media, Pharma, IT, all of them have ended in the green. However, on the flip side, you have Nifty Auto that has been your top laggard in today's trading session, followed by Nifty Bank. So both of these sectors have ended in the green. When you take a look at what worked out for Nifty Metal today, Nalco, Hindalco, Vedanta, all of these stocks did pretty well. But let's also shift focus, talk about some other big buzzers. Kaplan Point has ended the day quite high. Genus Power, upper circuit. DCX Systems also an upper circuit today. Glenmark Pharma also ended the day with gains of more than 4%. Very positive news flows coming in for all of these stocks today. On the brokerage front, Voltas, Entero Health, Shriram Finance, Aurobindo Pharma, all of these stocks did pretty well. But well, yes, that's how we wrap up today's trading day. 24,579, almost 24,580 on the Nifty.
If you like this video, then like, share and subscribe to ET Now.